We have a quick question here from Liam who asks, when we trade in line with the fundamentals, when we see a currency pair has moved a bit overextended on a particular direction, does that play into our decision-making process to take a trade or not? Thanks for the question, Liam. The short answer is most definitely. I think keeping a close eye on extended moves, especially as they head into significant price levels, are a very useful tool for traders indeed. Remember that even though we use the fundamentals to give us a tradable direction on a currency pair and tell us whether sentiment expects, a further move or not, it comes down to the technicals to tell us where to enter and where to exit, right? So of course, where to place our stops and profit targets as well. So I think looking at the euro US dollar is a great example. Given the recent developments with the ECB as well as the EU Recovery Fund, we obviously saw a massive rally in the euro for the last couple of days and weeks. And when we moved into the FOMC on Wednesday, we were right on top of a very significant higher time frame trend line, as well as a significant resistance at that 114. If we just quickly go to the daily, these were levels that we marked out as very important from the start of the week. And of course, we had the recent highs where the market kept on rejecting from those levels as well. So we had a very, very strong, very significant resistance area going in to that FOMC meeting. So even though the initial reaction from the FOMC, if we just go to the M30, even though that initial reaction saw that push to the upside, it gave us reason to be a little bit more cautious to the upside. And, we can see that the pair really struggled to get above that level. We did break above that 114. Of course. So, one way that you could have played that scenario was maybe to jump in at market when the announcement came out, or maybe waited for something like a 5-minute close to shake off some of the early volatility and then trade this to the next significant level and bank some pips. After taking out, that major trend line, of course, the next port of call for the move was at that 114 psychological level. So that gave you a very nice and clear target to aim for. And above that, it was really a stretch in terms of the positioning, how the market has moved. I mean, if we go back to the H4, it was just a monster rally to the upside without any substantial pullbacks. So now, of course, we did break above that 114 momentarily. If we go to the M15, for example, we did break above that 114 to the upside. And that probably caught some traders off guard, trading a pullback into that 114, taking a buy trade from that 114. But there was reason to be cautious, as in this environment, wasn't only the euro US dollar that was at an extreme level, right? We had the pound US dollar at an extreme level, the Aussie at an extreme level, the Kiwi, the USD CAD, and other markets, right? Like the S&P 500, the Dow, the DAX. I mean, if we have a look at some of these examples, going to the Aussie, we highlighted that very important daily level coming in at that 70.20, very significant resistance. The market rejected it exactly from that level. If we open up something like the equity markets, let's just quickly have a look. We highlighted a couple of those major resistance areas. I think the most noticeable one for me was on the DAX. If we just quickly zoom out, I think we should still have that level in place. Yeah, there we go. So if we on the H4, we marked out that very important 12.18 level as an area where we can expect some profit taking, at least after that monster rally to the upside. So we had cross markets basically showing us, listen, overextended moves reaching very significant resistance levels. So there was real reason to be more cautious, expecting further upside on the back of that event. So to your question, yes, the overextended moves and key support and resistance levels are always going to form a very important part of the overall trading methodology. And even though the fundamentals and the sentiment, they give us the direction, we still need to be aware of the technicals on the charts, as they do tell us whether our trade might be getting close to areas where we can expect market participants to react from, like we saw in this trading week. So I hope that helps with the question, Liam. Any other questions, please don't hesitate to let us know.